Let's talk housing and the impact of those recently lowered mortgage rates. Late last week, they fell to the lowest level in over a year. Joining us now is Ivy Zelman, Zelman and Associates CEO. Ivy, it's great to see you again. I like to pick up with this a little bit on the home price piece of the equation that, influences everybody. What do you see any early signs of what direction that's going to play out?
Well, at this point, I'd say that home prices aren't likely to go higher. I think they're going to continue to decelerate. Although the drop in rates had a bit of a mixed result, it's a little early to say. But remember, mortgage rates were over 7 late April and the first half of May. So it is about 50 basis points down, which certainly helps. A good rule of thumb is that a 25 basis point decline in rates is about equivalent to a 3% decrease in price. But today, I still think that it's a buyer's market and looking for opportunities for incentives from those that are buying new construction and mortgage rate buy down. So it's tough slaying out there.
You think it's a buyer's market, or do you think it's still a seller's market?
Well, buyer's market for new construction in that there are great deals. And, for example, I talked to a builder late Friday to say, hey, did you see any benefit from the drop in rates? And they said no, but we were able to buy 3.99% commitments for mortgage rate buy downs, which is definitely a good deal for a consumer. So in the new construction market, a 3.99% mortgage rate is pretty attractive and probably gets you back to sort of normalized affordability. The new market is about 10% above trend line. The existing market's still about 20% above trend line, even if you account for the drop that we've seen in rates.
Wow, it's amazing how they flip-flop from how it used to be, 10, 15, 20 years ago. What about the builder stocks, which were under pressure last week? And, I'm curious kind of what are their catalysts? What drives them at this point? People have now pointed to buybacks. They've pointed to, financial things that they can do that aren't just on activity anymore. But how are you thinking about them?
Well, the builders right now are definitely still on an absolute basis seeing pretty healthy absorption. I think because of the pressure on price, we're going to see a normalization of gross margins, which we think should be reflected in analysts' outlooks. With that said, if we see further pressure than people are accounting for, the stocks might be under pressure in the near term. But I think that, again, they're better businesses than they were in prior cycles. I think people are optimistic that they can weather any significant downturn better. But I don't really see a catalyst in the near term unless rates were to drop another 50 plus basis points to get us back to trend line and for affordability. So I'd be a little bit leery that comes to fruition today. But if it does, in fact, come to fruition, I think that the stocks will start to react positively.
Yeah, and that's a tricky equation, I guess, Ivy, because if rates go down that far, who knows what we're talking about in terms of where unemployment has to get to, right. Maybe for the market to price that in. So, and at the same time, we have seen existing inventories rise to a degree here. So are we moving the equilibrium point here between the kind of advantage of new construction versus existing?
Well, that is a good point. Nationally, the last data point showed that inventories were up almost 25%. A lot of the Florida markets are seeing the greatest increase. Tampa's up over 90%, but across the board, I'd say 70, 80% in most of the MSAs. Denver's up, San Diego's up. And because of that, it becomes a more competitive market for builders to, definitely have less advantage than they've had when they were the only game in town. I don't know that across the United States, though, we could say that, in the Northeast and the Midwest, inventories are just up modestly. So I still think there's an advantage where there is new construction in those markets, which is definitely less plentiful, but still an advantage for the new construction area in those parts of the country.